Hey, my name's James Nicholson and welcome to my YouTube channel. Now in today's video, I'm working from home. My car is broken, so I'm stuck at home today. But there's some big data out today. The inflation data came out today and it was really, really good. This man right here is very, very pleased with himself. I'm not actually sure why, because his policies didn't do that much, I felt, in order to change inflation. However, he's taking all the credit for it. So we're going to dive into the inflation data. What does this mean for interest rates? We've already got an update on that. What does this mean for house prices? And where are we looking at in regards to a recession? Because that's going to make a big difference on house prices and lots of other things. Now, before we do that, as always, guys, if you haven't done already, make sure you smash subscribe over there, somewhere down there. The video is in a different place now. Find that subscribe button and hit the bell notification. We're nearly going to get 17,000 subscribers this week, which would be crazy. And you guys know what to do. Smash the like button, tickle the like button, go and press the like button wherever it is on the screen. That really helps us with the YouTube algorithm. We want to get more people watching this content. If you could share this video as well, that would be greatly appreciated, and comment to let me know. So, Rishi Sunak, he pledged to halve inflation in 2023. That's happened. Now, a lot of economists are saying no government, regardless of whether it was Labour in charge or the Conservatives, really has that much control over this. And the credit is being given to the Bank of England for raising rates eventually. They were a bit slow to do that. But inflation has now halved this year, which is what Rishi was always wanting to do. So we were at 6.7% last month, which was really high, and that stuck at that level for 2 whole months, which was not great. And now we've finally had a breakthrough, and this is primarily due to energy costs. And so the energy cap changed. The cost of energy is significantly lower. However, the price that you pay might actually still be higher because there was an incentive. Also, there was some support from the government. So you might not actually be that much better off, although the rate of inflation is officially down. So this is a decent drop. This is what we needed to see. This is what they've been telling us was going to happen for a long, long time. And eventually they're going to be right. Inflation does have to pause or level off. Now, this doesn't mean anything's cheaper for people. So if you're a landlord, doesn't mean your tenants have got a cheaper cost of living. It just means that things are going up less quickly. So they're still going up 4.6% per year. If you didn't get a pay rise this year, things are more expensive. Now, on average, a lot of you will disagree, I know, in the comments on this one. On average, people have had pay rises above 7% now. So annually, they are getting in a slightly better position than they were. However, if you were one of those people that didn't get that pay rise, then obviously this hits you harder than most. So 4.6 is where we're at, and we're looking for that to continue going down, is where the target is. And so the inflation peaked. Let's see if I can move myself over here. So inflation, we peaked to over 10%, didn't we? And that was a significant number when we were at 10% for that fairly long period of time that we were above 10%, and then it's come down rapidly. But it has to get to 2% before the government will really feel that this is done. And the Bank of England, more importantly than the government, feel that this has actually been a victory. And we've got that uncertainty. So the big driver of inflation going down this month is energy costs, but there is uncertainty there. We've still got a war in Russia, in Ukraine. We've still got a war with Hamas and Israel. And so these things are things that can easily spike up energy costs again. And that would mean that we could have a second bout of inflation. So we're not waving the victory flags, as we say, right now. So what else is going on? Well, interest rates. This is interesting. And so Morgan Stanley, one of the big American banks, they're already making a prediction, and this is based off Hugh Pill, who is one of the Bank of England's board members. He was quoted as saying that if the markets want to bet that the interest rates will be down by the summer, then that's not unrealistic, which is interesting. And so Morgan Stanley are saying that interest rates, the base rate, will be 1% lower than it is today by May, which isn't too far away, and that's going to give a lot of hope to a lot of people. Now, what we've seen is banks are actually lending at lower than base rate at the moment, and that expectation of a lower base rate could be positive. And I'm confident that over the next 2 months, you'll see banks lower their rate of lending even more. You see, what's happening at the moment is there's not lots of lending activity. It's just not busy in the market. Transaction volume was down 15%. It's got busier, and so it's now 10% lower than 2019, which is a significant number. Imagine if you're an estate agent, you're a solicitor, that's going to really hit you quite hard, that kind of decrease in sales. And so banks are feeling it as well, because they make big fees when they lend money, and that's what they want to do, is keep lending. And so banks like HSBC, we've seen Santander, we've seen NatWest, we've seen Halifax, we've seen all the big lenders fight with each other to lower their interest rates. Now this big inflation drop that we've had today, I think that it will step down again. I think over the next few weeks, you'll see some great rates coming out. You'll see some headline rates coming down. And I wouldn't be surprised if we're getting closer to a 4% interest rate. There are buy-to-let rates today with the mortgage works that are at 4.5%, which is way lower than a year ago. And that was at 6% at that time. So there are buy-to-let rates today with the mortgage works at 4.5%. Last week, they were at 4.75%. Now inflation data is out and it's significantly lower. I bet you there will be definitely improvements on those rates that you can get. Let me know in the comments what you think will happen with lending rates. Do you think Morgan Stanley, based off Hugh Pill's comment, are right that interest rates from the Bank of England will be down from 5.25 to 4.75 by next May? And do you also agree that lenders are going to continue to fight for business and drop interest rates at the cost that we can borrow from, which at the end of the day is more important to us than the Bank of England rate? Very, very important. So what else is going on? Well, recession, they feel that we'll technically be in a recession this quarter, but it won't be a significant recession. It will be a little mild one, 0.1%. So not particularly bad. I don't think it's going to be absolutely hammering us, this recession, but it still will impact jobs. It will still impact company profits. These things aren't great news for anyone. And so the economy doing not so well is not good news at all. But it could have been a lot worse. I mean, we've been talking about bad recessions for the last 2 years. It just made sense that that would happen. Somehow we've got away with that and it didn't happen. And so if we can have a mild recession, that will be good. I would be pleased with that. And that leads into house prices. And so I feel going forward that we will still have some house price drops. And I think you're going to see that a little bit more in December. I think you'll see that in the first quarter of next year, because that data as it comes through is transactions that have happened before all of this, before this data came out today. So the deals that complete December, January, February, March, those were already being talked about at the end of the summer. Does that make sense, right? And so it takes a while for those sales to complete. Even if they're cash, the stuff that needs to be done, right, it takes time for this to go through. So this is interesting stuff, but I think that prices will still go down, but I think they'll go down less. So I think this will comfort a lot of people. So the factors are that are impacting house prices are the recession is not expected to be too bad. Any recession is not good, but it's not going to be as bad as what it could have been. Also, we've got interest rates from lenders to us dropping. We've got wages that are up 7%, which makes affordability go up. We've already have some house price drops already. And in real terms, with inflation, house prices are already down around 15%. They could go down significantly more, but I think a bigger drop is looking less likely. And this is going to give some sort of cushion and give us a little bit of a softer landing, which the economists have been saying for a while. So I think today's data is really good. I think it's positive. I think this is going to lead to some lower interest rates for us, maybe before Christmas, which will be really good news. I've got a mortgage that's on a 1.25% rate that ends in January. So anything better will be improved for me. I've got good cash flow there, so I'll be all right. But I'd rather the rate went down a bit more. So yeah, I think for a lot of people, investors especially, because we pay only interest, so it's a big hit for us when the rates go up. I think this is a really positive day. Hopefully the inflation, will continue to drop in December. And let's get it closer to that 2% target and talk about other stuff. No more pandemics, no more inflation. Let's have a prosperous time and move forward with the country. So let me know your thoughts on today's announcement. Do comment below. Do smash the like button. Do subscribe. And why don't you go and check out some more content on my channel, including this video right here.